we were something we never thought we could have.
And what is that?
Another chance. I think I'll have a shot. I think I'll have a shot.
Yo, what's good, everybody? Welcome back. I hope everybody had a good holiday. Everybody can hear me okay? How's everybody doing? Everybody good? Aloha. I like those words, man. Aloha. That's my home. All good, all good. I'll give this a couple minutes for some people to come in here. All right. Let's see here. Okay. I think we're good. Everybody can see my screen okay? Should just be the Well Squad. Cool. All right. We'll get to it. Get to it. So tonight, I've just been thinking a lot about as we wrap up 2021 and roll into 2022. I think it's a good thing is like our lives are rotating and things are happening with ourselves. It's good to look at where the market is and a little bit about the sector rotation of where things are. So I wanted to cover some of this tonight a little bit more in detail, and then give you guys some other tools to unlock some of the sector ETFs and things like that too for yourselves for more opportunities and being able to anticipate the sector rotation and finding some of those opportunities, whether it's through shares or through playing options. So I won't spend a whole lot of time on this. I don't know how many new people that we have in the training tonight, but a little bit about myself. I'm actually coming up on my 1-year anniversary in the Wealth Squad in a few weeks. So I'm actually really excited about that because the Wealth Squad definitely changed my life in this past year. And I know it has for many of you too. So I joined in January of last year, did really well, hit on some good plays, and just built up a community following with all of you guys. And you guys advocated really for me to be in the seat that I am now as an admin and just to be able to share all of the plays and the knowledge that I had for myself. And here we are. So I became an admin in April, and it's just been 180 miles an hour. It feels like ever since. Grateful to be here too. It's been a real learning experience and an experience of growth. And obviously I suffered some big losses too in the market too this year, but it's been a really wonderful experience for me. Outside of the market, I work in the entertainment business. I've been in the entertainment business for 15 years. It's like 15 years this year. As an actor, producer, doing voiceovers. I got some stuff in development that I'm working on, trying to launch this year. So I'm super pumped about that. And before all of that, I was in the military. I spent 5 years in the Navy on the USS Russell as a chef. I was a chef to 3 captains. And that whole life has really just informed all of my investing experience and my time in Wealth Squad. The attention to detail and just the principles that the military teaches you has really carried over and done well for me in the market. So I'm so grateful for those experiences. And then also with my job in the entertainment business of just dissecting scripts and reading story and bringing all this stuff to life. And all of that just further informs like all of my research and how deep I go into things. And it's just been a really hand-in-hand experience that's just paralleled one another. So I'm grateful for that. While I was in the Navy, I played semi-pro basketball. I played for my ship's team, and then I ended up getting recruited to Southern Illinois on a full ride scholarship that ultimately didn't work out, and I ended up walking on at BYU, Hawaii, where I did college in international business. Got cut all 4 years, so unfortunately, like the college ranks of basketball never worked out for me, and so I just I've played recreationally. I played in the NCAA summer leagues. I owned a basketball academy for 6 years in New York at one point. And recreationally, I play in the urban pro leagues whenever they happen out there. And then in another lifetime, I was married for 7 years. I got two sons. Brandon is he just turned 16. He's in the red flannel, and Nathan is in the yellow, who's 13, who's about to turn 14 next month. So that's a little bit about me, my why, my backstory of what brought me to Wealth Squad, and what I did before it, and what I'm doing during it, and here I am. So I just want to reiterate this for myself and all of the other admins. I only have one account. I am going to ask you about your trades. I am going to ask about your families. I am going to ask how you're doing, but not in the same language that these people do it for. So don't fall for these scams. This is my only Twitter account. That's my only Instagram account. And I know that that's the same for all of the other providers too. I know that they do care about you. They care about how we're doing in Wealth Squad and things like that. But man, we ain't never going to ask you for money. We're never going to ask to trade for you, any of that stuff. So don't fall for it. One account, that's it. So what is sector rotation in the stock market? So it's basically the movement of investments from one stock sector into another sector in anticipation of the changes in the economic or the business cycles that are happening. And the market as a whole has 11 different sectors. And this is the year-to-date performance as of today. I got it through the groups tab on FinViz. So there's 11 different sectors. There's energy, real estate, technology, communication services, financial, industrials, basic materials, healthcare, utilities, consumer cyclical, and consumer defensive. So with all of these, there's obviously a whole plethora of stocks underneath all of these little umbrellas. And when you can understand how the market rotates, you know, the year-to-date rotation is going to be different than the weekly rotation or the monthly rotation or the 3-month. In some of my previous trainings, I talked about how I really pay attention to like the 3-month rotation, because when you think about it from like even a business standpoint, you can't really measure any sort of growth or any sort of progress over just like a week. Same with like personal training, right? It takes a little bit of time for things to really like grow and for you to get the adequate numbers for you so that you can make better informed and educated decisions. So I really pay attention most of the time to the 3-month rotation for the performance for the market. But then also too, like I still stay cognizant of like what's it doing on a weekly basis, what's it doing on a daily basis. But in terms of like measuring performance and growth and longer term investment decisions, I'm looking further out. I'm looking at the 3-month, the 6-month, the year performance. So those are the 11 different sectors. Now with the stages, with the stages of the market, it basically follows a generalized like business cycle. So you've got your early cycle, which is where the economy shifts from a period of contraction to expansion. And that's the latter end of that, the last part, the recession part. And so for an example, in this scenario is where the federal government may spur growth by moderating the interest rates to encourage more people to borrow more money. And then you have your mid-cycle, which is around like when the economy begins to grow at a rapid pace, where companies and their profit margins and their lending activity begins to increase. That's going to be the mid-cycle. The late cycle of that is going to be the economic growth is approaching a maximum tipping point. Now we're at this phase now where like everything was at sort of its all-time highs, and things are starting to slow down now. You know, so in this example, the company sales slow down, the Federal Reserve raises the interest rates to curb the borrowing from consumers. And then you have your recession, which basically the economy contracts and shrinks. The consumers spend less, credit becomes harder to obtain, company sales decline, and then as a whole, the market as a whole slows down. It's important to really know like which categories of stocks do better during these specific phases of the economic cycles, right? So you have two different categories. You got your cyclical stocks, which these sectors historically outperform the market when the economy is expanding and consumers and businesses have a greater demand for the related products and services. And so examples of this might be retailers, restaurants, technology providers, and then you have your defensive stocks, which are your non-cyclical stocks. And even during the periods of economic weakness, these companies in these sectors all have a steady demand because they offer the necessary products and services, which this is like your utilities, your healthcare, consumer staples, meaning like your grocery stores, your food distributors, your producers, things like that. And in terms of market sector rotation strategies, right? So you can rotate your defensive stocks to your cyclical stocks when the economy is poised for growth, right? And then when the economy is going to slow down, you can increase the exposure to the defensive stocks during this phase. Now, these are just strategies that common strategy that people use as the market's rotating, and then that ultimately just helps you manage your risk. A lot of really, I think like the last month or so, month and a half, all of the growth stocks were just plummeting, right? Well, if you had all of your portfolio and all of the growth stocks, your portfolio was just trashed because you had nothing else to counterbalance any of the growth stocks, right? Whenever those were all plummeting and the market was rotating to different sectors. Now, just like the economy has cycles, the stock market has cycles, and some of those cycles are, so you've got your market bottom, which basically means you've got this poor economic backdrop that generally brings the entire market lower. And this is where investors will make preparations to rotate into more economically sensitive sectors. And during this particular market phase, the best performing sectors, as I kind of mentioned in the previous section, you've got your communication services, your consumer staples, your healthcare, your tech, your utilities. Then you have your bull market, which the market bottom is past. As the economic activity increases, all of the cyclical stock share prices will increase too, which, the bull market means everything goes up. And the best performing sectors in this particular phase are consumer discretionary, energy, industrials, materials, real estate, tech, all of them in general. But there's specific sectors that really thrive during certain moments. And then you have your market top, which is when your economic growth overheats and your interest rates rise and your investors rotate to more defensive sectors and less economically sensitive stocks. And in this particular phase, some of the best performing sectors are your communication services, your financials, your materials. And then you have the bear market, where the economic activity slows and then the market basically drifts from its highs. And then in this particular phase, the investors will rotate out of the cyclical stocks into the defensive. And then the selling activity that happens in the market at this time accelerates the market decline. And in the bear market, most of the better performing sectors are some of the consumer staples, the healthcare, and the utilities. So the stock market itself doesn't move with the economic cycle. What it does is it anticipates it, right? The market cycle is generally always 3 to 6 months ahead of the economic cycle. And the economic cycle takes a little bit longer to catch up to the market cycle. But on the contrary, the market also fails to digest the economic news efficiently in this whole phase, which could in turn result in the return on investment profits just being left on the table, right? If you miscalculate the sector rotation in certain times, it leaves money on the table, thrashes the portfolios. So it's important to, when it comes to sector rotation, it really takes micromanaging to stay on top of what's happening in the economy, what's happening in the market, how things are shifting. And then in the same way that we sort of couple the technical analysis with the fundamental, it's kind of the same sense with these two cycles, is that when you can combine the two and you can anticipate different trends historically based on patterns and trends, it helps open up more opportunities for yourself and helps you mitigate some of your losses and manage the risk that you have in the market. I want to hop over before I go into this one. I want to hop over into FinViz really quick. So in this particular, how I was talking about before, about paying attention to the different growth sectors, right? The 1 week, the 1 month, whatever, the 3 month, right? So utilizing this, you can really, if you use screeners or whatever it is you use, you can really pinpoint different opportunities, right? Your 1 month and your 3 month, you've got real estate and tech at the top, you got real estate utilities, and then your 6 month performance, you've got tech and real estate and utilities. It's all sort of flipped around a little bit. But from here, and I know I've showed this to a lot of you guys too before in previous trainings, but for those of you who don't know, using screeners, then you can come and use these, right? And you can segregate it. All of your, you can take your real estate, right? And just only look at real estate. You went from 7,000 opportunities to now you've got 282. And now if you want to play options on these, then you can play options on these, and you can start putting these parameters together to start building a watch list based on the performance of the different sectors and how they're rotating, and not just ones that are thriving, but also ones that are just getting thrashed, also ones that are down, right? You can, one of the ones that I like to use a lot is change from open, right? And I'll put this at maybe 2 or 3%. And you go from 27, now you got 15. Now you have a smaller watch list. Now you can do it based on your price points, or current or average volume, whatever it is you want to do, right? But then this, on the same token, you could do it on the downside, as in terms of like a reversal, whatever. And usually when you go to the downside, you're going to have a lot less opportunity. It's going to show a lot less stocks than it would for the ones that are going up, depending on the sentiment of the market itself. So that's one of the ways that I come here and use all of the screeners, and I segregate it based on sectors and how it's rotating to find those opportunities for myself. Now, going back to the presentation here. So instead of getting into the individual stocks, if you want to mitigate some of that risk, and you want to invest in the index funds, the ETFs, there's 11 different spider ETFs in each of these categories. You've got XLK, the tech fund. You got XLF, which is the financial fund. The XLV, which is healthcare. You got XLY, that's a consumer discretionary. You got XLI, which is the industrial. You got XLE, that is energy, and XLP, which is consumer staples. XLC, which is communication services. XLU, which is utilities. XLB is materials, and XLRE is real estate. Now, just like I mentioned before, all of these ETFs, it's not always the case, but most of the times, these ETFs are going to outperform the SPY as a whole. It's going to outperform the broader market. So I did this just to save time. What I did is I went into FinViz, right? And I just put in SPY. And then when you get there to the main screen, you can just, you input SPY, whatever chart you want to look at. I think you need the elite version to do this, which is what I have, the subscription. And then you can go to compare performance right here. And then you can compare SPY to whatever, right? You just type in all the tickers, you separate it by comma, and then it pulls it up on this yearly chart or whatever time frame you want to look at. So here I put in all of the spider ETFs, just as a way of looking at the different months of how each one of these were rotating, which ones were thriving on certain months. Here you see XLE thriving in like mid-March, mid-April, then it thrives again here in June, July, and then it comes, it gets thrashed a little bit from August all the way till October, and here we are back up to where it's at now, thriving above the rest, right? But you look here on the yearly performance and you see the performance of SPY at 27, and you have XLE at 46, you've got XLRE at 41. So some of these really outperform the whole entire market as a whole. And you can crack all of these open through the ETFs, right? And so what I did actually for you guys, I still got this up, cool. I went ahead of time and I tracked down all the portfolios, and I'm going to give you guys the links to all of these where you can crack open the ETFs. You can put them in your chart list through stock charts. You can chart them all. You can look and see what all of the holdings are on all 11 of these for yourself. In the same way that, you know, myself and Chris, Ray, and Kayla have shown you how to crack open the ETFs. I'm going to share this with you in the chat. I'll post this in the Wealth Squad too. That is the link to that Google document for you guys. So you guys can go in there and you guys can look at that yourself and spend some time with each of those ones that are interesting to you, that you want, crack them open, look at all of the holdings itself. And, you know, just like we're doing with crypto too, just chart everything on a regular basis, and find those opportunities for yourself. This way. Yeah. So in a nutshell, it's kind of a rundown of what sector rotation is. And now there's not like a set, you know, we have certain seasons. We know in August it's going to be summer, you know, all of the different seasons and the time frames of when these are going to happen for us. But for market rotation, you don't really know. It's based on so many other things that you can't always anticipate ahead of time. So it's always good to stay on top of what's happening in the economy. You know, you look at like the infrastructure bill, you look at all of the COVID stuff that's happening, the improvements for the boosters and all these things, and how that then affects the travel stocks and how those plummet, and then how the, you know, if there's issues with oil and gas prices and those are rising, well, then that's going to in turn affect the airlines. It's going to affect some of the other transportation stocks. But then that might have a different effect on, say, the railways. The railways might thrive, right? The materials, the building things, that might have an effect on some of those, to where it makes those bullish and it makes some of the airlines bearish. You know, so it all depends. So you have to really look at everything as a whole and combine the two, and look for ways that how one influences the other, and to be able to stay ahead and anticipate some of those changes in the market. Yeah, does anybody, any of y'all got any questions? Yeah, so you can, do you chart crypto the same way? Yes, you can put it all in your chart list. I know Chris dropped some stuff on his close friends to go through the whole entire chart list, gave everybody homework to go through all of those. And you just, you know, you save them in your chart list, and you can come through to stock charts. And it's all about time, right? The faster you can get through these charts, the largest portion of your time is going to be just unlocking these ETFs, right? It's going to be unlocking the ETFs, inputting them into your chart list, whatever. But you only have to do it once. Once you do it, you know, obviously you can update some of these ETFs every couple of weeks or whatever, right? To see whatever's, you know, new additions have been added. But once you do it, it's there, and that's going to save you a ton of time later on to just go through and chart everything. Are cyclical stocks the same one related to growth stocks, and are defensive stocks the same or related to value stocks? So the cyclical stocks are going to, just like I was saying, the it's the cyclical ones are going to be the things that consumers are not going to let's see. Yeah, so like your retailers, your restaurants, your technology providers, those are going to be the things, as the economy grows, right? All of your growth stocks, it's going to be, those are going to go in demand in accordance with that. And then your defensive stocks are all going to be basically all of the recession proof stocks are what your defensive is. That regardless of wherever the market is, people still, it's just like, I used to sell lighting way back in the day as a sales job. Lighting is recession proof. It doesn't matter how the economy tanks, whatever it is, the prices of anything, like people still need lights. So it was always a thriving market there. It just all year round, people are all residential, commercial buildings are all ordering lights. So that would be considered like defensive, because that's something that everybody always needs regardless of anything. Whereas the cyclical is all like seasonal. Yeah, same thing. Yeah, same thing with like prescription meds, pharmacies. People always need it. Anybody else with any other questions? Yeah, like don't underestimate market rotation. It can be complicated sometimes, and it can be really hard to stay on top of because there's so much news and there's always so much happening. But it could be the difference between you getting, it's a saying like for the first couple of months of the year, that's when all of your money is made, right? In the first half of that market. So understanding market rotation and what things are moving each other out could really be the deal breaker for you in some of your opportunities. So what sector rotation do you think we are in or headed for now? Well, now like you have all of the retail stocks are starting to run now. You've got a lot of the tech stocks that are starting to run now too. So as I think is like the holidays are starting to come to a close, then I think it's probably going to run right into the energy stocks again. Healthcare starting to boom again too, because now of all of the COVID stuff, but also like it's this, I think in the same sense of like how the seasons work, winter, everybody gets sick. So then all of the healthcare trials, all of them are testing their products in all of their phases. So those are all starting to run a lot lately too. Does the SPY reflect these cycles? For example, if the SPY is in a downtrend, does that indicate late cycle of the recession? I mean, it could. It could indicate that, because SPY is the culmination of the market. SPY is that umbrella for the market as a whole, right? So generally, if there's the saying of trading into the wind, right? If SPY is in a downtrend, you're not necessarily gonna do option calls on something in a downtrend, because you're just going to end up losing money in it, right? Or you're not going to invest in something while it's going in the downtrend. You're going to wait till it finds the floor. So there's a bunch of different scenarios and a bunch of different variables that go into all of that, but it's possible. I use equityclock.com. It shows you what sectors major financial institutions and hedge funds trade during the year. I actually didn't know about that site, equityclock.com. Appreciate the information. So Equity, McKinsey, mac and cheese says using equityclock.com. So check that out. I'll put this in the chat for you guys. .com. Oh shoot. I meant to put this to everybody. Yeah, there we go. when looking at the 3 to 6 month bar charts on FinBiz, do you look for stocks that have been beaten down or trending up? I do. I look for both opportunities, right? I'm always going to gravitate towards the ones that are in the uptrend first, but I'm always going to go back and I'm always going to look at the ones that have been beat up too, because you can, a lot of the times you can catch those on the reversal, right? So if you come into the screener and you're looking at some of those sectors, let's just see here. We'll just say real estate. Let's just open. So a lot of the times what I'll do is I'll do it based on the RSI too, right? Average volume, I'll put it at like 300,000, like anywhere between 2 to 300,000 is where a lot of these stocks start to really move. I know there's people who don't touch stocks that are under a million. For me, I want to catch them early and get into them to where you can take advantage of the big runs. And a lot of those runs start around 2 to 300,000. So in this particular scenario, don't really care much about price or whatever, right? But I might do the change from open, just like I said, up 3% or down 3% based on that. And then I'll come to the RSI, right? And I'll look at some of the RSI lower. I'll either do it custom or I'll do it this way, the not oversold less than 40. And a lot of the times there's not always opportunities that way, but if you can get the stocks when they're lower in the RSI, not oversold, that they might be on the reversal to the upside at this point, right? It looks like they're all just surpassing that floor and they're all starting to reverse, right? So that's one of the ways that I optimize the screeners to do that. And you can do it based on whatever you want in particular. You could do custom if you want, right? You could do let's just say from 28 to 35. This might not bring up anything. But if you can catch it in this this area where it's beat up, let's see. Yeah, there we go. Yeah, so it only brings up one. And you can see that it's all the Lodi, that it's all the way at the floor. Not really doing anything, but just using it as an example of how I look at it. Yeah, anytime it's oversold, it's all based on the extreme levels of the RSI, right? All the way down here, right? Is when these are overbought, and then the higher that this goes is when it gets oversold, right? This the middle here at 50 is sort of your median, is sort of your neutral phase there, and then obviously your extreme levels up at 70. But I know Kayla talks about this a lot too, is drawing support and resistance on the RSI. Now you can chart like this and be able to get in and out of plays based on that, right? You don't just have to chart. You don't just have to do support and resistance on the actual stock chart itself. You can also do that same thing on the RSI, because it's going to mirror that. RSI is not a real-time indicator per se, but it respects those levels. So you can chart the RSI too. What else we got that I'm missing? Seeing if I missed any of these, if I missed any questions. Will the PowerPoint be accessible at all? I'm totally fine with sharing it. I can share it in the Wealth Squad University, or not in the Wealth Squad University, but maybe the provider resources or something. I'm totally fine with sharing these afterwards. But again, these are just for the wealth squad, so don't disperse these anywhere else. Yeah. Anyhow, y'all, that's it. That's a little bit about the sector rotation. I hope that that's at least helpful for you guys of understanding some of those things and how to utilize that best for your opportunities and how to look at it in terms of the charts and scoping those out for yourself. I think ARX will hit $2 by July. The market's in like a really weird place right now. Like it's the majority, the market as a whole is really just kind of trading sideways at the moment. Like you get all these opportunities and people are still making a ton of money, which is great. But as a whole, the market's just kind of going sideways. And I think it's going to be sideways until, everything resumes from the holidays. After that first week of January, I think everything will start to resume again. And, everyone will be back from vacation. The volume on the market as a whole in general is significantly less than what it is on a regular basis. So if you're getting in plays and you're not making money or you're losing on your trades, it's okay to sit on the sidelines and just observe and use it as a learning curve. Like use this downtime in the market as a tool for you to just dive in and learn things that you weren't so great at this year, maybe support and resistance charting, whatever it is. Like use that downtime to really teach yourself some of the strategies. Is it possible to make stock list and trading view like stock charts? Yes. Let me see if I haven't done it for a while, but I believe it's over here. One of these here. News. Yeah, your hot list. You come over to your hot list on the side here, this little flame. And I think you'll input whatever it is, and what you'll do is you'll put this little banner next to it and it'll flag it. And then it'll end up going on like your watch list that you can do. Yeah, like sideways crap is the making you a smarter trader. Yeah, there's a lot that you can learn from just things just going sideways, man. Just sit on your hands, right? Go back into your portfolios and look at the trades that you're in. Go and chart all of your portfolio, right? So that way when the market actually chooses a direction, you can stay ahead of the game, right? This time of the market going sideways is a chance for you to go through your portfolio and to actually map out a strategy for all of your plays that you might not have otherwise when things are moving so fast, right? You miss a lot of opportunities when the market has a direction because everything's so fast. So actually when it slows down and it goes sideways, it's a good thing too, right? Because now you can kind of refocus your efforts on some of your other strategies. How do you add the percentage calculator to the chart? Close. Yeah, you could take this down here in trading view. You do it through the lower left hand or the lower right hand corner, this percentage right here, and then it'll take this and it'll just put it in terms of percentages. But in stock charts, you just go into whatever it is. You just go into the annotation. So when you go to annotate this, I might have forgotten how to do it too. It's one of these. I can't remember which. Oh yeah, right here. So you'll go to the percentage change, right? When you go to annotate this in the chart, and then based on wherever it is, you can input this into the chart here. So you just go to annotate and you do that as one of the tools there on stock charts. Favorite trading programs. I use TradingView to chart with. I use stock charts whenever I'm looking at, like, all the chart lists and things like that. When I want to look for entries and more intimate details, I go to TradingView. TradingView is my primary, but then stock charts I go if I'm like breezing through all the stock charts and things like that. Is there a video on setting up TradingView indicators in Wealth Squad? I'm actually, I think Ray has done some of them, but I'm not for certain. And if there's not, I'll look for them, and then maybe I'll do a tutorial on TradingView on setting up some of the indicators and some of the tutorial walkthroughs for some of those for you guys. Yeah, so the TradingView, you come back to the TradingView for the percentage. You can use this down here, the toggle the percentage in this lower corner, or you can use in the hot list. You click on this hot list, and then you'll just do your watch list. You do your watch list the same way, and then this is like your shorthand version, your shorthand access to everything is this column over here. So you can put everything there and pull it up so you don't have to type in all of the things. But then also, whatever you have on the watch list, you can watch them all on 8 different screens, 7 screens, 6 screens, whatever. You just go to the layout. I believe you have to have a higher subscription for that access, though. Is FinViz Elite the preferred place for screening volume? That's just everybody's different. For me, I use FinViz, though. FinViz is my screeners and what the bread and butter of where I primarily live. But then I also get the volume sometimes from stock charts. Some of the data is delayed. It's not always real time. It's not always up to date. FinViz, and to get it in real time, you have to have higher subscriptions. Otherwise, it's all delayed data. So. When it comes to news resource, what do you use to read the current news, such as the Chinese news that came out resulting to Chinese stocks run-ups? Look, for me, I use a lot of it is in Twitter, but also too, you can use FinViz also. Like FinViz has all of the news all the way at the bottom. It has everything there. You can also, CNBC is a good spot to go. It's a good resource to use. I use microcap search to look at some of the individual stocks, but it just all depends. I mean, it's literally anywhere. Just Google is so powerful, and there's so many different resources out there for you to find the news of what's happening. Yeah, Chris, it's a good point. If you haven't done it already, it'd be helpful to know which indicators all the admins are using so that it can be easier to understand the rationale behind entering position based on the chart. Maybe there's a list that we can put together of some sort. I know a lot of the indicators that we all use the same ones. It's not too drastically different between all of us. I know for myself, I use the EMA 5 and the 20, and I did on TradingView, I did have the opening range breakout indicator, part of the orb strategy that Taylor uses. But for me, I can just see it now because it's based on previous highs and previous lows of previous days. So going back to it, I can just see it because I've looked at it so much. But if I'm unsure of any of those levels that I marked out, levels that I mark out, support and resistance, I'll turn on the orb, right? And then just to confirm the work that I've done. But a lot of the times I've noticed that, oh, I mapped out this support, this resistance, and it's already at these price targets. It's already at these levels. So it just comes with experience, where you might use one indicator at some point, but then you might outgrow it and not need it anymore. You know, if you follow Gerald Peters, like, he doesn't even use any of them. He just uses the candles. That's it. He doesn't use some of the other ones. He only puts them there for us because he says we're too dumb. But he's also been doing it for like 30 years, you know, so he can see it. And it's the same too for all of us. Like, the more you do it, the more charts you look at, the easier it is to be able to notice those things. So anyhow, anybody else got any other questions? Was all of this stuff helpful? Do you have any recommendation in how to be notified when the volume and trend picks up for a stock, since it's hard to track so many stocks? You know, for some of them, like if you have them on your watch list, I know in TradingView, it's good to just set alerts, right? If you know certain certain support and resistance levels that you're looking at, or entry points of when you might want to get in, is to set your alerts and to have it notify you when it crosses a certain threshold, right? I don't know necessarily per se, if it's got, whenever it reaches 500,000 in volume, I think you might be able to actually. If you go here, let's just say, for instance, here for add alert. Yeah, so add alert for SPY. Let's see. Yeah, so right here, and then what you would do is you would double click on this, right? And you could go, value, right? You could do the MACD crossover, whatever it is. Oh, I see. No, that's the wrong thing. Yeah, I don't think it's specific. I'm not for sure if you can do something so specific with like volume and things like that. I think it's mainly like the percentage change of how things move. But I don't know. If you've thought about it, I'm sure someone's done it already. So if somebody knows one of those things, I'd even be interested in setting alerts like that for myself too. It's not alerts that I'm already regularly doing for myself. So the only alerts I set are ones for like percentage changes or certain levels. Stock twits is helpful, generally when picking up on volume. Me personally, I choose Twitter over stock twits. Stock twits has a lot of garbage there. And I think that Twitter also does, but I think it's far less. There's a lot of just like arguing and just, everyone curses at each other on stock twits. And it's not necessarily the same language and sentiment on Twitter with a lot of the stocks, at least in the things that I've read about them. Stock twits gets a little crazy. So I don't really use stock twits as much anymore, almost hardly ever. I use Twitter the most, and then I'll actually use, I'll go through the comments in Webull sometimes and look at that. But other than that, that's really like where I look at, news and how things are moving, or what people are talking about. Are there indicators to track when the market rotation makes its way back into a certain sector? There's not necessarily like an indicator per se, but you just have to stay on top of it. And you really just do that through, Kenny, you just do that really through, like, at least I do it through the groups tab in FinViz. There's multiple other ways, multiple other sites that you can do it. MarketBeat, Benzinga, all these other sites, give you access to that whole, like, the heat map, if you will. Do I ever use a trader's cheat sheet on bar chart to establish support and resistance levels? Yes, I do use that on occasion. I haven't used it for a while, but I do use that too, Tiffany. And those levels are I think they're pretty accurate too, at least the ones that I've followed on there on bar chart. See, Phil. Phil, my bad, man. Let me see. Phil, can you recopy and paste your question? Is there a check system in order for me to know if I'm charting efficiently other than paper or actual trading? I don't personally have like a personal like checklist by any means of if I'm charting correctly. I think for the most part is really like maybe Kayla has put something together. I'm sure she has. She's put together so much stuff in the market facts and resources. There's probably a checklist of some sort there that Kayla has probably already done months and months ago. But for me in general, um, for me, when it comes to charting, what I keep it so simple, and I think that the hard part for people about charting is that we try to make it so complicated because we're looking for patterns, we're looking for trends, we're looking for bullish and bearish pennant flags and bull flags and all this other stuff. And when you just keep it simple between support and resistance and mapping out, it is look as many levels as you need to map out, that's what you map out in your charts. And it's all your entries and your exits are all based on previous highs and previous lows of previous days. So if you can connect the trends of previous days of we know for something to consolidate it needs three or four candlesticks for it to be in a consolidation, right? So if you see that those candles are holding that support, that holding that resistance, then those become stronger levels to where these are periods where these are points in time on the chart with these certain values where you're going to get in and get out of your trades. So yeah, but I don't have like a checklist that I go down every time when I'm charting necessarily. If you go back on some of my other trainings, maybe master the charts, master your income, maybe one before that. It's one of my earlier trainings where I did a rundown of like certain questions that you want to ask yourself about, like where's the share price, where was it before, where's it going? Some of those questions I think are important to ask yourself when you are charting, because those are sort of the ABCs of the basic fundamentals. If you don't have those questions answered, it makes it difficult for you to actually understand your trade and what your strategy is, and sort of along those lines. When researching companies, do I think Yahoo Finance is pretty reliable? I don't. I don't really use Yahoo Finance a whole lot. I would much rather go to and this is why I use microcap search, because everything's all there. Like I'll use Yahoo Finance just to get the profile of the company, but then I'll go directly to the company website and I'll go look at their investor section, or I'll go to the SEC site and look at all of the the financial statements and things like that. I don't necessarily, again, because the Yahoo data is it's not necessarily the real time, and it's not updated regularly in the same way that a company website or a company, the direct source. I'm trying to go to the most direct source that I can every time. That's my own personal way of research, and no matter what it is I'm researching. How do you set up overbought scans or any scan for that matter in stock charts preferably? I don't really use the stock chart scanner as much. I'll use the predetermined scans from like the MACD crossover and things like that, because that one's good. I wish I could duplicate that in the FinViz. I've been trying to for months to figure out what are the exact parameters that it's going to find all these bullish MACD crossovers, but I haven't been able to crack the code yet in FinViz. I've been trying for months and months though. But I'll do some of the predetermined scans that they already have set forth here. And that's just here, go see the latest results. And then there's just a bunch of other ones, right? The gap ups, the breakaways, and as you were saying, what were you asking again, Sam? Yeah, so the scans themselves, it's different categories, right? I don't know the exact parameters behind them of like what they're set to exactly. I only know the ones that I've set up in FinViz, but these are all ones that you can use on both ends of the spectrum, bullish and bearish, that offer a ton of opportunities. Like there's no excuse really like why you couldn't find opportunities in the market with all of these resources together and all of these predetermined scans. It's really about you just looking at the charts. The more charts you look at, the easier it's going to be to spot all of these opportunities for yourself. Do you ever use the screeners in trading view when the market is open, or do you only use FinViz? Yeah, Drake, I only use the screeners in FinViz. That's really my only ones. I haven't used the ones in trading view. I haven't really explored that too much. I probably should, but I have I have like 35 or 40, like, yeah, I think it's like 45 screeners that I use in FinViz that I continually scan all throughout the day. So I have plenty in FinViz, and I'm always like looking to find more too, to have more screeners. Let me see here. Pearson, you can ask your question. You can unmute yourself. Oh, I think maybe I got to give you access. Let me see. Yeah, Pearson, you can ask your question if you didn't have one. Okay. What do you recommend as an option flow dark pool resource? You can use Cheddar Flow, or you can use I have a brain fart. Cheddar Cheddar Flow is one. Flow Algo is the other one.
Somebody really important. I'm not gonna answer that. I'm right there with a bitch. That's so disrespectful. Shit, disrespectful, bro. I'm really
Hey.
So you gonna answer another bitch in front of bitch you talking to?
You guys can mute yourselves.
Bro, depending on what that mind.
Yeah, you can use unusual whales too. I haven't really used unusual whales, but I know a lot of people use that. They've got a whole bunch of different features to it now, that it's been really helpful for a lot of people that I see. I see people all the time on Twitter putting plays together based on whatever unusual whales does. Do you think it's smart to buy cheap leaps when the volume and OI are low if you believe the stock will move towards your strike? Yeah, man. I mean, like, look, if you can get cheap options and you can you believe in the company, this is answer your question, Michael, is like, if you believe in the company, you believe in the stock, why not get the cheap leaps? And for anybody who doesn't know, a leap is an option that's a year out. And by cheap, sometimes, like, they're not always necessarily cheap per se. But if you can score a banger leap, why not, man? They're kind of, the leaps are safer options. I know Mark Monroe. Mark Monroe is really big on leaps and getting those further out. He talks about those all the time. Can I use the same resource to get short interest info? You can get short interest info by going to, I think it's Short Trade Desk or iBorrow Desk, something like that, or you can get it through Ortex. Ortec is the short interest data. Again, it's a paid resource, but there's some free resources out there, but it's not really going to give you updated information. It's going to be delayed. And it's not necessarily going to be accurate. So that's the only downside to getting the free stuff, is that you don't have the data in real time. And for me, especially if I'm trading options, I want data in real time. I don't want delayed data. I don't want stuff that's behind. I want stuff is updated as close to real time as possible. So you might have to pay for that. And for me, I've always found like that cost is worth it in terms of how much money you're making. Would you recommend options that have a far out expiration date as they lose value over time? Angie, I would say, like, yes, they might lose value over time, but if it's a further out expiration date, you give yourself time. You give yourself time for it to reach your price targets. But if the theta isn't too crazy, then it's always a good option. Like for me, I like playing the weeklies because they're risky and they're cheap. They don't always work out in my favor, but if I'm not doing the weeklies, I'm looking at least like 3.5 to 4 weeks out. Usually like that 3.5 week mark is usually where you'll find all the activity in the options contracts. For next year, it costs $535. You think it's safe to do something like that? So Yo-Yo, I'm not like, there's more to that question in terms of, yes or no. I mean, it's really like looking at the chart. It's also looking at like where Netflix is in the grand scheme of everything. But I think getting option contracts for further out, I mean, February is 2 months away, so that's plenty of time for it to move in the direction. Netflix is volatile enough that it could certainly get. I don't even know what Netflix is right now in terms of share price. Let me go look at it real quick. I'm guessing you chose the 700 because it was probably the much cheaper contract. But the risk that you run with that, yes, you don't need it to hit that strike price. It only needs to move towards it. But for me, for February, $700 is probably way too far out of the money for myself, for my own personal taste. For me, I'm probably looking at somewhere like I would probably look 350-ish, right? Because the last time that this was even 700 was in November. So I don't know, it might happen. It might be all right. to do the 700. For me, it's a little too far out of the money for my own personal taste. I would probably aim for, you know, somewhere around here in the 650, 660 range for myself with Netflix, because Netflix doesn't move crazy on a daily basis, right? The average true range for Netflix, $12, $12.50. So you have to look at all those too as you're mapping things out for yourself, and figuring out your expiration dates, because all those things matter. Anyhow, y'all, any last questions? I appreciate all the questions. I hope that I was able to answer all of them thoroughly. ATR. Michael, what are you thinking about with ATR? Are you trying to do shares? Are you trying to do options? What's your plan? Oh, average. Oh, got it. So the average true range is a culmination of data over 14 days. So what it is it's the average movement over those days. Like if, you know, December 1st, it moved $8. December 2nd, it moved $6. So it's going to take the average of all of those days together, and it's going to get that calculation right of over the culmination of all those days, and it works at you know, you can put it on your trading view. I think you can probably put it on your stock charts too. I just started adding it to mine, really. Like one of the last trainings I did when I was doing all of the Roblox stuff is when I started putting that in there, and it's helped me understand my plays a lot better. It's helped me enter and exit those trades at much better times, because you're able to, whatever trade it is that you're going to get it into, whether it's to the upside or to the downside, add that average true range on both ends of the spectrum, right? Because then it opens up for you, like, what are the possibilities? Where could this run to, you know, in a day's time, right? So it just helps you understand trades a lot better and what its average movement is. That's true to itself. Like, it's not some, you know, guesstimate. It's actually it's true range. Yeah, the average true range is the indicator. It's the actual name. It's called true range, but then, you know, it's average true range is what I use. You can put it on stock charts. I think you can put it on stock charts. You can put it on TradingView, Thinkorswim. And then when you're just mapping out all of your targets, your price targets, whatever it is, I usually set my average true range, whatever that figure is, like that'll be like my low target. My biggest triggers when getting into options, it's got to have volume. It's got to have volume. It's got to have some sort of a catalyst. Something has to be behind it. Yes, you can trade just the technical setups, but it's always helpful if it has that catalyst behind it. I've been trying to trade a lot more just based on the technicals. So it needs to have a good technical setup. And for me, as I've explained in a lot of the charting that I do, I'm always looking for those gaps. Like it needs to have room to move. It needs to have somewhere to go. And I'm always looking for gaps that are going to give me, you know, $2 or $3 move, like minimum, because in the options world, those $2 and $3 moves are thousands and thousands of dollars. So that's what I'm always looking for. I'm looking for those gaps. The gaps are a big part in me choosing options. Sophie, no, I don't have Sophie. Here's the thing with Chris and Crystal is I love it. I love all the stuff that they're doing, but man, I don't have enough money I don't have enough money sometimes to get into all their plays. It's you know, I at one point I was like trying to keep up and get into every single one. After a while, I can't. You know, you just have to pick and choose. Or if I don't get into it right away when they get into it, I might let it pull back, because usually what happens is when they get into the plays, they run within the next couple of days, they'll pull back and then they'll run again. So I might catch it on the second wave if I miss it on the first for whatever reason. So and that look, that's with all of our plays too, is that don't be afraid to just wait for a second for a pullback, because it happens almost every time. When you say gaps, you're saying the difference between open and close on a day. I mean, in terms of gaps, is like where it is and where it's going, right? It's gonna open up. I don't know. I'm just gonna open up a bullish MACD crossover chart. And just look at these real quick. Chart list. So we'll go look at this one. Yeah, so for, I don't know, this one, for instance, right? Like the gaps, this is what I'm talking about. Like this is at 64, right? This is at $64, but where was it before? It was all the way up here in the 80s, right? So it has all this room to move. You know, is that 60? Yeah, 64. The SMA's at 66, but it has the 200 at 71. So like, you know, this is obviously resistance. This is resistance for it, but it has room to move, right? You look at just a standard support and resistance on this, and you really have it right here at the 71, 72. So if I were to play options on this, I'm probably looking at like a $65 call, or maybe the 70, right? It doesn't have to reach 70, it just needs to move towards it. So for here, it's a possibility of like, maybe this is a price targets are all personal. So you can set it at whatever you want. Will it go back to 81? Yeah, maybe eventually. But in the interim, I'm looking at like, okay, 71, 72 is my price target at the SMA. Maybe I'll get out of this trade at the 200. I don't know. So that's what I'm talking about in terms of gaps. It needs to have room to move. That makes sense. Anyhow, y'all, I hope this was all helpful. I want to be mindful of everyone's time. I've been trying to do better at keeping my lessons to an hour. I'm over by a little bit, but I just I want to be mindful of everyone's time. On the right side, you clicked on the predefined scan. There's an option to edit the scan. You may be able to see the parameters, use the scan and dip and locate it in Finvis. Cool. I appreciate that tip, Drake. I'm gonna look into that and check it out. I appreciate all of you guys, man. I hope that all of you had a happy holidays. And look, it's a new year coming up. It's right around the corner. A lot of really great things in store for Wealth Squad, man, and what we're gonna do, and money we're gonna print, and what we got in store for everybody. And so make it a goal for yourself to really put more time into learning the things that you need to learn. The stock market isn't going anywhere. Understand how the market's rotating. It's rotating every single day, every single week. It's rotating, right, to all these different sectors. So spend the time that it takes to learn the material and to learn the technicals and to learn the fundamentals, because those skills are going to stay with you for a lifetime. Stock market's not going anywhere. You know, I know that we're all in a rush to make that money, be financially free, but I would rather spend the ample amount of time on that learning curve, you know, just like, I don't know, that quote with Abe Lincoln, like if he had 7 hours to cut down a tree, he'd spend 6 hours sharpening his axe. It's the same thing. Really take the time to hone your skills, because that's what's going to print all your money, all of it. That's it, y'all. I appreciate you, and I'll see you in the Discord. This will be uploaded. Andrew will probably upload this in a couple of days. So, and I'll attach the Google spreadsheet doc for everybody, so you guys have that as well in the Discord. So, anyhow, be cool, y'all. Have a good night.